Okay.
So we're saying something before the thing went off. So you see that, so your business is to spot the breakout. Once the market is doing the breakout of your fractal, then you are plotting your Fibonacci. So then another thing now, so you see that based on what we are just saying now, before a breakout occur, that means you can pick your two levels. I don't know if I'm communicating now. You
Yes.
can decide to pick your two levels. For instance, okay, look at this thing, for instance. The market opened here. The day you are still sleeping, it have this resistance again, this support again. Do you know that you can say, okay, this is your condition. You just pick these two conditions and you are now monitoring this condition. Kind of. I don't know if I'm communicating.
Yes.
So if you are monitoring this condition, if you are monitoring this condition, you can take a decision on this condition you are monitoring because you already picked these 2 points which you have spotted as up resistance and support. Then what you can do on this in some cases is that's okay. If I pick this range, remember that this fractal support appear on the formation of this fifth candle. So which means that by the time I plotted this, by the time I want to expand it so that by the time I plotted this, it has given me the various levels of the buy zone, which is from 0 to close to 23.6. Then you see that at this point, if I am taking any decision here, I have a very tight stop loss. Am I communicating?
Yes.
A very tight stop loss. And I'm able to get my bullish engulfing here or this structure. So that means if I take a decision of buy at 8.2, my stop loss is here. And market now picks my order and they move
Mm.
up to this, up to 100 and break out. That means that this market is likely to even reward me more and pushes my target, which is 161 and this. So you might decide to pick your arbitrary support and resistance and see how the market moves. That's why we're saying that if you wait for breakout or call, fine. You might decide to pick that order. Okay, look at here again. For instance, here, you see, you pick here and here. I pick this and this arbitrary here. You see that this bullish engulfing, this fractal appear on the fifth candle, which is this one. Now, if I've taken my buy decision here, what happened? Here is my stop loss. Am I communicating?
Yes.
Then I take my buy decision. Even if I take my buy decision here, then price now moves in my favor up to 78.6 and I see some profit. Do you know I can take my stop loss and place it at my entry and say, okay, if this market will reward me, I am no more risking any of my money. Then if price will reward me, it is supposed to sustain the profit it gave me and continue going up to 100 and 161. Now, but what did the
Mm.
market do? Because let's not be that we are just analyzing history and it looks so perfect. Now, what did the market do? Now, this market that was giving me profit now eventually turned to where? Bearish what? Engulf.
Engulfing.
Then hit my stop loss. If I not adjust my stop loss, market is now
Mm.
hitting me in a very big negative. Market goes for me. I feel okay, market is going to follow me again. I did not take a decision based on this engulfing. What happened? Price coming
Yes.
down and knocked me out. Are you seeing it?
Yes.
It knocked me out entirely. I lost. Now, what of? I said, okay, if this is the range that shows that sellers are taking this market, what of if I reverse this again and say this is now because it shows that sellers are strong? I'll reverse this as bearish engulfing. Are you with me?
Yes.
The same point again. So that means there's a breakout here. Where the market is going? 161 extension where?
200.
200. You see it again because it's a range that shows that this is your dominant factors of sellers and buyer. And if you look at it again, see the market went to your target again, 161, 200. So you can establish that the market should break out of range and with a strong breakout candles, then there's possibility they will push to 161,200. Now, what is your break? Remember, we define breakout candle. Remember, we define
Yes.
that. You remember it from
Yes.
what's your buy
Yeah.
breakout? What's your say breakout?
The one that is violating the stop loss.
And close below, is it not?
Yes.
So if this is your stop loss, now this is a sell breakout candle, is it not?
Yes.
So you see what happens. So you see that these sellers, then if you place your Fibonacci from that high to low, which is your range you choose, you see that sellers are able to, this is a breakout, pushes this market to 161 extension
100.
200. Am I communicating?
Yes.
Now let's look at the current market. Okay, now this is the current market again. Okay, let's assume again here you pick this range. Let's assume you pick this range from here to here. Okay,
Okay.
you pick this range again. You draw your Fibonacci on that range. Remember, this what we are doing now. We have not seen break of structure, but we'll just pick a range where we
Okay.
says that there are that we see sellers here and we see buyers here. We'll drop this range. Am I communicating?
Yes.
What does this thing that tells us? If the buyers are serious, if buyers are serious, that means that they will break above 100 and push it to 161.8. Am I communicating?
Yes.
So now what happens here? So if you take a decision based on this bullish engulfing here, look at it. You take a decision based on this bullish engulfing, and then you place, maybe you enter on the close of the bullish engulfing here. Then market was moving in your favor. Then what happened? Here is your stop loss. Now market pulled back again and was ranging here. Now, what are you looking at for here? You start looking for either a frustrations of the buyers and they could not mitigate or push through it, and then you see the market is coming against you. Then remember, you may have in mind again that if this market pushes back, they might come inside this your buy order block. So they come back here again towards this point. Then if there's no strong bullish engulfing within this first buy signal, what do you think that will happen? That means the buyers are losing it because now this is like second opportunity. Am I communicating?
Yes.
So now you remember your stop loss is at risk because you entered here. So you can take a decision and says, okay, I might decide to close this in manually because all I'm seeing here is almost bearish engulfing. For your definition of bearish engulfing, price that closes below the
Um.
the
The
open
open
of
up.
the bullish. You see that sellers are more dominance. So you can decide to go out of the market that is not it's not what you are expecting you are seeing. Because the essence that if these bulls are strong, you're supposed to see more bullish candles, pushing market upward. But see there's a strong rejection. So now what do you think that will happen? It may say, okay, that if sellers are true, that once they violate this signal, then that means they will push this signal here to where? 161, 200, is it not?
Yes.
Then you might decide again to say, okay, you don't want to sell inside this zone because this is a zone of buyers because you are still seeing the bullish candle. They can wait for the breakout. You see your breakout candle now
Mhm.
that violated the stop loss. So if you take your signal, sell on the violation of this support level, then here will be your tight stop loss here. So where is your target? At that point, you can then readjust your Fibonacci from here to here and target here. You see how the market came to your first profit, 161.
Wow.
So it's not a rocket science. Is that clear?
Yes.
So if this market weakens again, If it weakens again, where do you think it will extend? It will extend to
100.
200. Am I communicating?
Yes.
Okay, now let's look at it in this form again. Let's pick your cells on break or structure. Pick your cell on break or structure. If you look at here now, because sometimes what we are doing is what in our mind, we're trying to fix a particular information of our mind, which is what's called the rigidness of decision. So when your mind is bent for particular, and that's one of the problems in the market, that is a very big problem. If you want to be too flexible, it will influence your decisions. You see yourself buying and selling per second, but that's what market is doing. If you want to fix it again, it makes it to be one directional. You see the problem? And that's
Yeah.
why doing this as a team becomes very important key. Now, if we are saying, okay, your own is that I'm trading break or structures, and no matter what is happening, I'm entering with a tight stop loss. If you look at here now, you see there's a break or structure here, is it not? This support level is broken. Is it not broken? Hello?
Yes, it's
Yes.
broken.
So this is a same breakout candle. So if that be the case, if I take it here and here and says, okay, I'm selling. If I take it and say I'm selling, I can sell this to 161. I sell it to 161. Do you see them? Extension 200. I'm out of market for that day. I sold this in for that day now. I made my profit. I'm out of market. Then let's look at another one again. The next day, the market, you have booked your profit here now. Market was it going in your favor? You're not doing anything again. You look at it again now. You see there's a break of structure here again. Do you see it?
Yes.
So your own is that you are doing whatever market tells you the market says doing. You got a break of structure here. As tiny as it is now, but there's a break of structure here now.
Yes.
What do you do? This is the low, this is the high that led to this break of structure. What do you do again? As tiny as it is again, you want to know your target because your own is just to trade to 161, 200. You plot your Fibonacci on that structure again. Where do you target? 161, 200. You see, you
Yes.
traded to this again. You make your targets. That's why I say that if your targets are small and you are winning, at the end of the day, it's cumulative. So you also book your profit again. You don't push up to it because anything can happen. Then you wait again. Now, what happened again? So if this market is in a range, because if it's also in a range, somebody can still take a decision. Somebody can take a decision here. Someone can take a decision here. But what decision do you take here? You take decision here on assumption. Because this is now the battle between the buyers and the seller.
Yes.
So you see now you're taking, so there's no breakout. Do you understand now?
Yes.
Okay, what of this now? Because I only put in one direction. So what if I do something like this? So this is the battle now. This is the battlefield now. But you see the battle. So what do you do at this point? What do you think you can do? Because if sellers break out, they go to 161. If buyers break out, they go to 161. So what do you do? So you see, that's why it's two directional.
Mm.
That's two directional. So at this point
True.
now, market is just in the equilibrium state. So we don't know what is happening. But towards this zone of buy now, we see that buyers are pushing it up to this level.
Yes.
Then pushing into the sell zone because these higher values are the sell zones. Again, I seen it. You see that like
Mm.
sellers are coming again. So like they are pushing back into the buy zone. So you see, market may be consolidating inside this zone. because we are not sure until when there's a fractal breakout. If you sustain, it can push it to 161. If seller push it down here, if they sustain, it can push it to 161. That's why it's good for you to take a decision when there is a level breakout. So because even the same thing happens here again. Because if you wake up and say, if I got this range, if buyer's able to break out here, they will stand to 161. Then you say again, that's why I said this is all about probability. You draw another one here again, the same thing again. If sellers should break down here again, they come to 161. So you are watching the market. Is that clear?
Yes.
But what happened now? But if assuming I pick only this one, is it that I become biased? I become bullish biased. Because my mind now will telling me to looking for buy opportunity. I see something.
Yes, yes.
If we do this one again, it becomes like bearish bias. My mind will tell you to start looking for sell opportunities. That's why I said that whatever you impose in your charts would trick your mind. You start looking for your mind to believe in that thing, whatever you impose, whether indicators or whatever. So, and that's why it is important for you to make use of stop loss and define your entry zones. Am I communicating? So if you are plotting breakout structures and this and that, see that. So you see that mentally, you can be taking decision on the mentally, whereby that any decision you are taking means that your primary function is basically to be identifying, because where the much momentum lies in the market is those bullish breakouts and the bearish breakout candles. That's where you have more of the momentum. Am I communicating?
Yes.
Sure.
Where those fractal points are broken, you see here, you see that there's a bearish breakout. So even that's why they tried to violate that candle, they could not. Market went down. If you look at where the market goes up again, you see that you see the long bullish candle is always very powerful. You see it again.
Mm.
You see those some of those buy candles. You see how they're always powerful. Shows that because the larger the body, it shows you the more momentum packed that is contained in the market. I seen it. The bigger.
Yes.
That's the only thing, the information that is available to you on the breakout. Okay, look at this one. See that this breakout has a very powerful bigger board, but at the end of the day, see how the bearish, how the sellers.
Yeah.
Yes.
Sellers.
Got it. Yeah.
Now you can measure the what I call the momentum of these sellers. Now, if you measure this sellers momentum, which is from here to here is the sellers momentum, this place. If I measure
Yes.
this again, don't be surprised that you see give me you see perfect target again. Because it's very large momentum of the seller. So they were able to drag this market up to 161, extension 200 before the market reversed at that point. You could imagine.
Mm.
Do you see it?
Yes.
So I said, okay, these sellers are so powerful because they are so powerful, very long rejection. So I can say, okay, where are they pushing this market, this powerful rejection here? I said, okay, they can push it because once they break below the 100 level, which is this is a breakout now. I seen it.
Yes.
You see the same breakout right now? So that means that they can push this market to 161, extension 200.
So
Okay, once they push the 200 and they reverse the market, I know that they take the market out strongly. Why did they take this market out strongly? Because despite that, because there's still a strong bull power here. You see there, confirm here. But this rejection shows that there's something they want. They want to come and pick more orders and maybe do stop loss to hunt stop loss here. I seen it. That's the essence of
yes.
this rejection. So in a way, so you see that what is happening in this market is that if you can understand what these guys are doing, you understand, what these guys are doing, and you allow them to play out, then you follow them and make the money. There's
Mm.
no magic there. So for me to
Yes.
see strong rejection inside these strong buy signals, what I would do, I says, okay, let me measure the strength of these people. So I was able to see it. Then this. Let's look for another similar thing somewhere. let's look for another such, if we can see something like that happens somewhere. I wanted to see such buy rejection signal that happens and then see what happened at the end of the day. You saw that because these are part of things that once you spot it, okay, you just know,
Okay.
oh, this is a one-time opportunity. I'm going to make money again. Okay, look at similar signal here now. You see here again. You see that this is a strong buy signal. Do you see?
Yes.
Yes.
This is a strong buy signal that was rejected strongly. So what this is telling you now that don't be in a hurry. Allow the sellers to push down. You can see says, okay, if sellers are willing to push this market down, so it's not like a castle. So that because they want to come and hold stop loss. Now, if you place your look at it now, it just doing like if it's doing like a science. Do you see it now? Where do they push it again? 161. Nobody will tell you this secret. Even if you are looking at elsewhere in the market, you cannot see it. It's a something that came out of a lot of research. So you see it pushes to 161 again.
Yes.
You could not extend it to 200, but what happened? You see that it take market up strongly again. So this is your power pack signal. Your power pack signal that you can use also to make money. So you can measure the extension of these sellers here, then it pushes up. Let me show you something that happened in a crude. Let me take you to crude. Let me show you something that happened in a crude so you can understand some of these things. Let me show you something that happened in a crude. Because what we are looking at is what these guys are doing and how we can take advantage of that to make money and manage our risk. There's nothing there. I want to show you something there on crude so you can understand where crude is going. This is the monthly time frame crude. This is monthly time frame. Pay attention here now.
Strong rejection.
Do you see something here now? Do you see that similar candle here?
Yes.
But this one occurs at as the resistance level, which means it pushes the market down, is it not?
Yes.
Now look at this one. Look at the similar candle here. Look at similar candle here. What do you think here now? So you see that this candle here now shows that there's a strong buy up in the market, but there's a strong rejection. You see this strong rejection? So when you see this strong rejection in an uptrend, in a very strong uptrend, you really know that market will correct up to 161 200. Then that means at that point you can look for buying opportunity. So if we have this knowledge and then we'll spotted this and we'll plot our Fibonacci on this. I seen it then.
Yes.
So you already know that here that this market, once it breaks the 100 level, you see the 100 was broken.
Yes.
Where do you think this market is coming to? 161. This is monthly. Oh. So this thing takes years now, months to complete. You can imagine you are selling this for months and they come to where?
Excess than
200.
200.
I seen it again. Then they try to
Yes.
push it up. Market pull back again. Then push it back again to 261. I seen it.
Yes.
So that means that if this market complete this cycle here, now what happened? This market will go up strongly. So that means that you can put in your arsenal of crude oil. Now, when crude oil finishes this correction shown by this seller's rejection here, the market will go up strongly. I seen it. Then we are now gotten another secret info here again that the sellers are still intact here. So if we remove this current one, if this again shows that sellers are intact here, that means that this can help us to know where this market is likely to end its correction. Are you with me?
Yes.
Yes, we
If
are.
I take this thing on the monthly and then project it again, so now it has given me more clue that this market is going to come into maybe final correction on 50 at level of a 56 or 200. Are you seeing it? So what am I waiting for now? So when I get a strong sell candle that closes below the 100, that means the journey will start. The crude will sell to 161 extension
200.
100. And it's from here then I start looking for buy opportunity in the market. If I take this signal on the weekly, you see that strong rejection. This is that strong rejection now we see on the monthly is simply a strong bearish engulfing. Do you see it? This is a strong bearish engulfing. Are you seeing it?
Yes. Yes.
That's why you see that when you see a strong pin rejection, when you change the previous lower time frame, whether you go there or you not go there, is a strong bearish engulfing.
Engulfing.
So that means that if this engulfing is holding and the price breaks below this 100, you see what market is showing now? That this market will set down to where?
161.
Extension
200.
200. I see. So from here, if I get bullish engulfing at this market, I'll start looking for buying opportunity in the market. So you can put that particular candle as one of the arsenal's candle in your check. When you spotted it, I seen it. When you spotted it, okay, you already know, oh, I'm going to make money using this particular candlestick. Am I communicating?
Yes.
Yes.
Okay. I don't know which chart I'm using. Sorry. Okay, it's like this one. So you see that. So whenever you spot something like this, so you know that it's opportunity to make money. Because if you look at it, I see that this candle is a strong buy candle because there's a break of structure. Did you see there?
Yes.
It shows that buyers actually came out. So that's why that sellers it was rejected strongly. That yes, the purpose of this thing is that they want to come and hunt stop loss up to the 161. You see market now. See where eventually market went up for at least for 2 days. This is 1 hour. Am I communicating?
Yes.
So if we any place you spot such candle, so it doesn't occur anytime, but then any place you see that occurs, just says, okay, I don't see opportunity, I'll still make some money and put it in my pocket. Because once it occurs, you're welcome. So once it occurs, you're able to maximize it. And then I'm just trying to see whether we can see another place it occurs. So anytime you spot it, it can be okay. Look at here again. This one is small. This one is small. You see, there's market break this level again. You see it again. You see at the end of the see how the market went up strongly. It doesn't occur anytime, but anytime it occur is opportunity. If you measure that rejection, if you measure that rejection, it goes to this one even went down to up to 423. You see, market reversed strongly. It's a unique candle. It doesn't occur all the time. So sometimes, what these guys do, they use it to, it's a strong buy signal, but they use it to do manipulations to hijack a lot of stop losses, then make people feel the market is going down, but at a certain level, they will reverse their order. It's not a regular occurrence, but if you spot it in a higher time frame, my dear, just prepare to make money. If you spot it in a lower time frame, it may just last for a few hours or few days, but it will reverse the market. Look at this one for you see this one again. You see the inverse part of it again. This is a powerful buy signal. You see, but that's why I see that they went back again to violate that low to mop up stop loss. I see in there. But after mopping all the stop loss, what did the market do? It's the market reverse strongly. So there's a certain the bull powers you can see in the market, then you don't need to joke with it. Okay.
Yes.
So let's go back to our channels and this is what we're saying. So we said that again that sorry for the deviation, that part of the learning. So is it that whenever you spotted the break of structure, You are just, you say you are not doing any mini analysis. You are just looking with your eyes. You are just guessing it. You are now spotting where a particular level will be broken. Whatever you choose arbitrarily, that you choose here. Assuming I choose this particular candle, I see there's a break of structure here. I see it again. You
Yes.
see that buyers are willing from here to here is the range. See, eventually they break market up. So now it depends on you. Do you take your distance and draw the channel and says, okay, this is what you are waiting for? That will say subjective. You see the breakout again, you buy. So ask question. We have less than 8 minutes. Let me take questions.
Okay.
Yeah, my wife wants to ask a question.
Okay.
Oh, okay. So there was sometime in the past while you were teaching, you joined or combined two candles to form a bullish engulfing that engulfed the previous candle.
Mm.
So yeah, I want to know in what cases or what situation can we do that kind of combining to join two bullish candles to engulf the previous bearish.
Okay. Okay, good. That's a good question. How do I put it this way now? Market, as we say, market has millions of faces.
Yes.
And then the engulfing by our definition is a candle that closed above the open of the previous candle, bearish candle, is it not?
Yes.
Fine. So by that definition, we're supposed to be like one candle. So if it's by one candle, like what you are seeing here, this is one candle. It's a bullish engulfing. If you look at this
Okay.
particular one now, it's a bullish engulfing, is it not?
Yes.
Now, from my studies, because I have to explain this, and it's good you ask this question. From my studies, I discovered that there are different types of bullish engulfing also that occur in various forms. So I named them. I think I was able to spot like 5. Personal for me. So I will show you those 5 I spotted. And I says, okay, which one are more powerful? And what do I do? So that question you asked me now, and I call it bullish enhancement engulfing, bullish enhancement. Why did it be enhancement? The first candle was there as a haramid. So the second one now complete the cycle.
Okay.
So I call it bullish enhancement. I don't know whether that's or something like that. So my interest in that bullish enhancement is just basically to focus on the engulfed. You see this one now, this is a perfect bullish engulfing.
Yes.
Now let's look for bullish enhancement. Okay, look at this example now. You see, this is bullish enhancement now because it's a two candle. Hello?
Yes, we are with you.
So this is a bullish enhancement for me. So my emphasis on this is that, remember I told you I spotted 5, and I'll mention 5 before with time. So my emphasis on this is that I don't want my bullish engulfing to be more than 2 candles. So I prefer 1 candle, 2 candle. If it's 3, I know something is wrong. Because if it's 3, the market may collapse, because that means that for 3 candle to engulf 1 candle means that there's a lot of drag. Am I communicating?
Yes.
So this is like a bullish enhancement. So your question is that if I see the 2 candles and the second candle was able to complete it, I'll call bullish enhancement. And how do I trade it again? For me to trade it, there are 2 ways you can trade it. You can take your Fibonacci again. Remember, you take your Fibonacci, plot it on the bearish candle and the lower low. I seen it, then still target your 161
Yes.
extension 200.
Mm.
I seen it because
Yes.
it's a bullish enhancement. Then there's another one also that happens. I called bullish engulfing breakouts. What is bullish engulfing breakout? Like this one. You see that this one not only closes above the open, it closes above the high. Hello?
Yes. Yes.
So I call
Yeah.
it bullish engulfing breakout. And one of my problem with bullish engulfing breakouts is that the power is so powerful that sometimes the market, sometimes it will fail. then sometimes it will pull back. But one thing there is that if I have bullish engulfing breakout like this, I was expected the next candle not to close below the engulfed. Remember our rule, once price can close below the engulfed, something is wrong. So this bullish engulfing is also a powerful buy signal. It's one of the powerful buy signals. That is the bullish engulfing breakout. What is your rule also? The same rule. Take your Fibonacci, plot on the engulfed to the lower low again. The same rule. You see now we're taking this one on the micro level. Are you seeing it again?
Yeah.
You see that after the engulfing breakout, I see market now pull back to the 100 level to pick more order. Then pushes to my target. Are you seeing it again?
Yes.
If you look at this one again, that happened again. So this one is like bullish engulfing breakout again, but it now closes inside again. The same principle again. As a single candle, you are trading on a single candle. That gives the condition. You see it again. So then if you are doing that single candle, you can buy with it below the 100. Your stop loss is this. Remember, we're not trading this one as a structure now, as a breakout. We are trading as a single candle. So we're now trading 161 extension 200. Is that clear?
Yes.
Yes.
Then we have, I give you, how many did I give you now? The bullish
3.
enhancement, the bullish engulfing breakout, is it not?
Yes.
Then you have your standard bullish engulfing. What is your standard bullish engulfing? Your standard bullish engulfing is the one that close above the open. It did not violate the high. Let's see whether I can quickly spot something like that. Standard bullish engulfing. So you see this one now is a bullish engulfing breakout. Are you seeing it?
Yes.
So what is your standard bullish engulfing? Okay, beautiful. You see this one now? You see your standard bullish engulfing now?
Yes.
Because it closes on the open.
Open.
Are you seeing it there? So
Yes.
this is your bullish engulfing. That's how market create divergence. Market still went up. So you see this one now? You see this one now is a bullish engulfing breakout. So I said sometimes bullish engulfing breakout. You see it again. The market pull back before going up. So I don't know if I've addressed your question. So I was able to
Yes.
spot that also some bullish engulfing also, that once the bullish engulfing occur, the market now will pull back and close below, but it has violated the open. Then pull back somewhere, maybe something that will give you a very powerful entry opportunity. Okay, something like this, something like this. Do you see this one now?
Yes, we
See
do.
that this one now form bullish engulfing because it's violated the open. Then pull back and say has some bullish body. So if somebody who traded this small one here, you see that person still take money here. Are you saying it?
Yes.
Yes.
So that means that you can have, these are the types of bullish engulfing. Once I spot in the market, I'll say, okay, there's opportunity here. So this is now bullish engulfing in the making. Are you seeing it again?
Mm.
So this is bullish engulfing enhancement. This is now bullish engulfing like failure, but not complete failure. It gives opportunity. You have normal, a standard bullish engulfing and bullish engulfing breakout.
Mm.
Maybe I will check where I documented. I wrote these types of bullish engulfing and share with you. So
Okay.
what it's telling you here is just like it's showing you how the buyers are appearing, but they've not completed the process, and the sellers come in. And remember that some of these rejections show that sellers come in, and if you track where they can push the market and they could not dominate, because if you look at here, you see that sellers step in, and as they are stepping in, they tend to violate these ones. But at the end of the day, the buyers who are showing up here again takes the market up. Am I communicating?
Yeah.
So that's it. This one will go off in any moment. Do we do the final timing?
Yes, please.
Okay, so let me put the time by 1:15.
Okay.